Welcome to the Market Alert for Thursday, the 3rd of January 2019. So the pound overnight, before we move any further, we had a flash crash, and this is being cited on Apple share price dropping sharply. I don't know where the connection is apart from import-exports around the globe, I suppose, and sales in different currencies. But this sent the USD, JPY, Oz dollar, and others as well, including the GBP rather. And you can see that there. Market recovering. You can see there at the moment we've retraced 50% of the drop. This happening in the evening of last night. You can see there. But recovering so far, and around the DP level. The market down yesterday. We were returned back as soon as the market got to below the 200 bar moving average. It was down all the way there. You can see the market dropping over 150 pips there, and in the daily chart you'll see it here. And then of course you've got the flash crash, as they're now calling it, down to the 124.76 level there, retesting the lows over here. So there's a bit of a buyback going on in this market at the moment. I would expect further weakness in this market going forward as we head to the 14th of January, when May's Brexit deal vote. Notice it's disappeared off the radar completely at the moment, and no doubt it'll be resurfacing shortly, as again they're probably trying to blackmail, cajole, or whatever it is to get these MPs to vote this what can only be described as a surrender document through the House of Commons next week. Is it next week or the week after? The week after. So we'll see. Yeah, it's going to be a week on Wednesday, I think. So we'll see. News today, nothing really. Nope, nothing to shout about there. The Dow yesterday, we'll start with the daily chart. So you can see that we had a bit of an interesting day. A lot of volume as well. Market up, then it was down, then it tried to rally back. Overnight, the market is moving lower. It's still weak. There's still a liquidity problem. The yield curve continues to invert, as you see there. We've got yields tumble. If we come back to here, you will see there was mention of this as well in one of the other articles about the yield curve continuing to flatten, which is not good at all. There was an article about it, but it's not good when the yield curve flattens. Each time this has occurred, the market has seen a recession follow. Yield curve crushed again, you see that, and again there as well. You don't want the yield curve flattening. This means that the nearby rates are offering better deals than the further out ones, and that's not how it should be. So we'll see going forward, but this occurred in 2000 and 2007, before we had both of the major recession and of course the Great Recession, as it's called now. And here's the yield curve chart. This is the free version. We've looked at this many other times in the alert, but you can see up here where the yield curve has dropped massively there. And if we go back to 2000 first, you'll see that we've got the yield curve inverted. You can see there the nearby is greater than the further out, and these are shown here. You've got 3 month all the way through to 30-year. And then in 2007 you'll see exactly the same thing as well. It's around here somewhere. There you go. So again, you can see the same thing there, and then we had the correction, and now we can see here as well that we're getting to an inverted yield curve. You can see how this is starting to pick up here. As soon as this is higher than this, then again, it doesn't bode well, that's for sure. It's a brilliant indicator. It's not definitive and it's not going to be 100% every time, but certainly in the data that we have here, it's shown that on the two occasions in 2000 and 2007, but well worth looking at that. Keep an eye on this. That's the address for it if you want it, and keep an eye on this going forward. And where were we with the Dow, weren't we? And then so yesterday intraday, the Dow moving higher. Now you can see this after moving lower in the pre-market session. Market took out the 200 bar moving average, came back, sat on it, moved higher throughout the session, and then sold off thereafter, and then gapped below the 200 bar moving average, and has since found resistance at this level. A bit of buying here. You can see a very sharp buying there as the market's tested here and rebounding at the moment, but overall looking weak. Bit of a dead cat bounce here. As I say, there was no volume on this 1,000 point bar. For me, that doesn't bode well at all for this market. And then finally in Bitcoin, nothing to report here. This sideways, so I'm not going to dwell on this because there isn't a lot to report at all. It's been sideways since we started the festivities, and it remains that way at the moment as well. Okay, with that, we'll call it a day. If there's anything else to report, I will let you know, but otherwise, as ever, thanks for watching. See you in the next one.